highs earlier this month. What are you seeing here for Amazon?
Yeah, a little bit of concern when it comes to that pullback here, but it is still in a uptrend. Now, obviously, we're talking about the AWS side of the business here, which has been fairly profitable and continues to grow at a pretty healthy clip at around 17% on a year-over-year basis. Now, that's a little slower than maybe some of their peers, but they do command the majority of the space when it comes to cloud. And I think if we are kind of looking towards the next earnings announcement the next earnings announcement, I think the clear thing right now is going to be the AWS segment. And if consumption demand is starting to slow a little bit, we actually saw the same type of situation with MongoDB yesterday, where they are highlighting the macroeconomic factors might be putting a little bit of pressure on their business. I'm wondering if AWS is going to do the same thing. Going back to that chart, though, if we look at the 1-year daily chart, we actually can see potentially actually a decent bullish setup, to say the least. We made some relative highs here over the last couple of months, but one thing I just wanted to highlight, we actually did have this nice little gap up earlier in the year from February 2nd, where we gapped from $160 to $170 here. We kind of pulled back, tested that level, made some new highs, then we kind of gapped down, tried to retest that 165 level again. We had the one power candle day where we did see some buyers kind of stepping in. We made new all-time highs, but now we are actually testing one of those gaps again today, and you want to see some buyers actually stepping in and try to resume this trend. If we do not, then that February 2nd gap is going to be an area of concern. And Tom, if we do break below that, that would be actually a fairly bearish signal. So it's kind of 50-50. 15 points to the upside would be new relative all-time highs. 15 points to the downside would actually close that gap. So we're kind of at the end of the ledge here.
Kev, this is an interesting chart, because this 174.5 level, like right where it's trading, looks like there's a lot of touches back from early 2024 and then a couple times in the spring until now. You're looking at that as we are, but there's other things, right? This company loves to do the spend cash and then back off and let the earnings come in. How about this, Kev? They're trading right now at 13 times their operating cash flow. That is half its 20-year average in terms of valuation. So this stock is starting to get cheap from a valuation perspective, Kev.
Yeah, because the fundamentals are starting to, I hate the term, stocks can melt up into their valuations or appreciate into their valuations. I'm not a big believer in that, but Amazon is one of those companies that has been able to do that. Now, they have adjusted their expenses, so that is one of the reasons why we have had this overall adjustment or sentiment shift for this company. They right-sized the consumer business, and now they're operating at a pretty healthy clip there. And then for AWS, and when you're looking at the AI front, yes, they're going to spend money on the AI servers and things of that nature here. We are expecting that to ramp up throughout the year. The question is going to be the return on investment and how long that's going to take. And if it's going to be, if they're going to be seeing some other competition in this space that could take some potential market share, especially when you're looking at Azure and Microsoft here. I think right now, Amazon's probably in a holding pattern when it comes to the AWS. If they can just maintain that for right now, get the infrastructure built up, then they can expand the consumer business, which is lower margins, but drives the bulk of their revenue. And that might be able to pad the stats here a little bit and give them this valuation that you were kind of talking about.
Yeah, they mentioned they're cutting prices on 4,000 items, kind of following what Walmart and Target are saying also. Consumer getting stretched here a little bit. But that's the key, right, isn't it, Kev? If they can ward off those gains from Microsoft, Azure, and then Google Alphabet also in their cloud, if they can stop that bleed that they have, because they had a 33% market share about a year and a half ago, now it's down to 31%. Is that the key?
I think that is going to be the key. There's been a lot of pressure on Amazon to really have them show their AI capabilities. But we have to always ask this question. These companies have to figure out what the consumer wants. And I think that's the tack that Amazon's taking, as well as Apple, when we talk about the AI space for them as well. They are implementing artificial intelligence across their platforms, not only when you're talking about AWS, but also in the consumer business as well, to help out those small and mid-sized businesses. And they are seeing a return on investment for that. And it's hard to really be able to maintain market share or continue to take market share when you have some high-profile competitors out there like Google and Microsoft. But once again, Tom, I think you just maintain, if you can keep the margins where they're at right now and you maintain this business for AWS and you see the consumer side continue to grow and take market share, I think that provides a decent balance or mix for this company. And that's probably why a lot of investors have been looking towards this name, the hybrid of consumer discretionary / consumer staple, and then also the technology front.
All right, great stuff. Thanks to Kevin Green, Senior Markets Correspondent here, giving us a good backdrop. Now